Hello traders, this is Sam. Welcome back, I guess, and Merry Christmas. And this is going to be my last video for the year 2012. And in case I don't say it later, I wish you all guys a Happy New Year and hope 2013 comes with lots of good trading. Anyways, we have the Euro Aussie dollar. I'm in two trades right now, and I would like to talk about them. I'm actually in four trades, but I'm going to talk about two trades. I'm going to explain some analysis that I do, how I enter my trades, how I pick my trades, the entry points, and the exit points. I'm going to be talking about the Euro Aussie dollar and the USD Japan, which I exited today. They're both long positions. I don't know why, but I seem to be putting up lots of long positions. I try and balance them out. I actually prefer short positions. I prefer selling because the market always drops way quicker than it takes for it to go up. But my positions have been long, so I guess that's what we're going to be talking about. Now, as you guys know, I always get my buys from the day chart. So it's the Euro US corrections Euro Aussie dollar day chart, and this is price action, and these are resistance lines, support and resistance lines that I've drawn out based on the day chart. I'm not gonna start explaining how I drew these lines yet. I will do support resistance video maybe next year, but it will come out soon. If you guys are interested, just comment or something and just bring it to my attention, and I will try and help out as much as I can. Well, anyways, let's talk about my trade first. I'm up 146 pips, and I went in on this trade down here. This is my entry point. Now the reason for my entry, what I did first was I checked out and I drew on these resistance lines. The price was somewhere here, and it hit the resistance, and I was thinking if I should go in, and I said no, let's wait for a break because that makes more sense. So it came down and then it went up again just as I expected, and it broke it. And this is price action. This is the Heiken Ashi candles. The Heiken Ashi candles are not the standard Japanese candlesticks. They are considered the future Japanese candlesticks. I will not be talking too much about them yet, but these indicator, it's a price action indicator, and it's amazing. It kind of weeds out noise in the market, so it gives you price action with a trend line. So it's a two-in-one kind of indicator. It's just basically saying it's an uptrend or a downtrend. It keeps it nice and clean. So this is obviously an uptrend. It's a long-term uptrend, and I was looking for a long entry. So I was waiting for the break of this line. That was my first clue. So it broke. I also am going to talk a little bit about the MACD. I'm not going to talk too much about it because it's an easy indicator to use. All you're trying to figure out, it's a trend indicator, so all you're trying to figure out what the trend is doing. I would have gone in here, but since the MACD was below the zero line, I didn't want to open up a long position yet. So I waited. I waited for it to come up. It hit my resistance, so I knew that the line that I drew was correct. It came back down, and then it broke it. The moment it broke it, I also had a crossover on the zero line on the MACD. That's two indications. And the Heiken Ashi showed a long candle body as well, three indications. So I decided to take the trade, and I'm in the trade. And where am I going to get out? Same thing, I drew a resistance level down here. So my trade is going to be from here all the way up to here. I didn't get in at the best possible time. I came in down here, which is slightly above because this was a huge candle. The moment it broke it, it just shot up like crazy, and I wasn't at the computer to get in, so I kind of missed out on a few pips. Now the total trade would have been from here to here. That's almost 500 pips. So I guess I can still make a good amount of pips. I entered down here. So my take profit is going to be at 350 pips. So I'm about halfway now. So let's see what happens. I actually have a good feeling about this, and I'm going to keep it going. Now my second trade, this is a running trade. It's a live trade, and it's going to continue going up, I hope. If my stop loss is obviously here. If it comes back here, I'm out of the trade. So here, stop loss down here at this level, and take profit down here at this level. So let's see what my risk and reward ratio is. My risk is about 150 pips, 130 to 50 pips. And my reward is 350 pips. That's a pretty good ratio if you ask me. And these are trades that are worth taking. You don't want to be risking 20 pips for a 20 pip gain. That's a 1 for 1. That's not bad. But I kind of prefer risking, even if it's 100 pips, I don't mind risking it as long as I can get 500 pips out of it. That's how I think, at least. Now the second chart, I know it looks cluttered and extremely messy. Don't worry about it. I'm just going to take this away. I'm going to talk about, these are the same lines. I just managed to figure out where the resistance points are. And this is an obvious line. If you see down here, price has been uh, testing and testing. It normally takes 3 tries before it breaks, and this has been the case for quite a bit. It tested once, tested twice, thrice, and then it broke. And when it breaks, it really flies. Again, unfortunately, I could not go in down here. I would have liked, it would have been optimum if I had gone in down here, but I wasn't at the computer. I was busy doing something else. I actually think I was playing a different trade, and I did not look at the USD Japan because I don't like to play the same currency more than twice in case something goes bad. You need to diversify your trades. I think I was in the Euro USD or something else, so I didn't take this trade. And yeah, so I came in down here, and I have closed out this position because it has hit my um, resistance line. So what's going to happen is I'm going to wait, and I'm going to see if it crosses this region. You can even take it from here to here if you want to, but I don't like, I mark out zones that I think are problems, and I'm going to wait for this, for price to cross these zones. And if it crosses this zone, I'm going to go in. I have an entry position down here, and take profit's going to be here. I like playing my trades smart. I like doing proper analysis and going in at main levels. Supply corrections, support and resistance are always based on supply and demand of the market, so it makes a lot of sense to me. Now the Fibonacci that I drew before is just basically Fibonacci's levels. You can read up about it on anywhere. I think they have good videos explaining how the Fibonacci levels were established by Leonardo Fibonacci. And it was actually, now this is an interesting fact, Fibonacci levels were explained by an Indian mathematician. I think it was I don't know if it was a physics guy or a mathematician. Someone explained it a long time ago, and then the Italians made it famous. So now everybody uses it. It explains, it's called the golden ratio. It explains the law of random logic. Just go Google the stuff up. It's pretty cool. So what I did was I saw an obvious move up, and then I saw a stall out down here at this resistance level, and the retracement wasn't more than 23.6%, which is an extremely strong up move. And I was thinking I had to get a part of this because if I didn't, it would be stupid. So when I saw the break, I didn't see the break, but I saw that it broke this level, and I was here, and I knew I had to go in because I kind of assumed it was going up to this level, and the magic ratio is 61.8. So this was the take profit level, and since I had a major resistance down here, I pushed it up. I took profit down here pretty much. So yeah, I had the Fibonacci levels with the confluence of the major resistance level, and the Heiken Ashi is also showing a long candle. So it's probably what I would assume is going to happen is it's going to break in, break right through it. It might do a retest somewhere, but that doesn't bother me at all. If and when it breaks this level, I'm going to go long again. This is probably going to be a trade for next year. And same thing is stop loss. My stop loss was obviously at the 100% level down here, because if it comes back to that, you don't really need to be in the trade. My profit was 84, well, like it says down here, 84 pips. My stop loss was about 40 pips. So it's a 2-for-1 ratio, and that's something that I like to work with. I think I think the best would be if you could get a 3-for-1. If you risk 100 pips, you get 300 pips. Those are the best trades. But it's pretty difficult to get optimum entry positions all the time. So work with what you have. And I'm just making these videos because I'm trying to show that it's easy to trade. Anyone can trade. It gives you financial independence, and I think everybody needs money. Yeah, well, that's it. And again, happy holidays and happy new year, everybody. And if I can help in any way, I hope that I am. And Enjoy yourselves. Take it easy. Ciao.